All right, ladies and gentlemen, sitting down and enjoying some great familia here, including my good friend Sarah Duffy Grego. It's always good to see her doing what she does, getting ready for Valentine's Day. Again, this is a wonderful place to come for any type of food you could ever imagine, but those authentic Italian recipes that have been around for generations. And of course, Lou Bellino, his wife Michelle, they would love to see you here on Wednesday, February 14th, which also happens to be the first day of the Lenten season. That is Ash Wednesday. Now, here's some stuff that I want to talk to Ted about that I've been really chomping at the bit. Not that I don't love sports, but I really love Wall Street. And of course, every week, Jim Meredith and company, Heffron Tillotson, Your Money and You on your weekend magazine from 9 to 11, just before the Coons Market Black and Gold Sunday Show. And just because the NFL season is over, Ted will join us every week throughout the year at 12:30 Eastern on the Disc Institute of Pittsburgh Newsline, because the NFL never sleeps. But now, let's talk about the latest development, Ted's, in the financial market. The Dow Jones Industrial Average jumped as much as 350 points in the morning trading, erasing an early plunge of more than 500. The wild swings today mark the third day of volatility in global markets. Wall Street partied hard while President Trump pushed for huge business tax cuts from 35% to 21%, that the economy, many, didn't believe that it needed to do that because it was going along A-OK, although the president felt differently, and the tax cut euphoria was on. It carried the Dow to 8,000 points. They've never seen that level before. Now comes that so-called hangover. And remember, that's giving lots of medicine to an already healthy economy and those side effects. And namely, one of them, the big one, is inflation. Those inflation fears are suddenly rocking Wall Street, that set a new Dow low, as in plummeting 1,800 points in just 2 trading days. The losses wiped out a quarter of gains since the Trump election. Now stocks definitely boomed. The Dow spiked 45% between Trump's election and its all-time high less than 2 weeks ago, 26,000 on the Dow. This, of course, many people believe because of the tax cuts. And oh, woe is me, the panic was in the streets. Everybody was thinking it was over, but lo and behold, Fast and Furious finished today, 500 points. So Ted, let's talk about how we all expected. Anybody who follows Wall Street knew that it couldn't continue at such record highs. So is it what you expected, or maybe was it on the lower end than you expected? And at least for one thing's for sure, it finished on a high note today.
Well, you have to understand that the stock market is not a leading indicator, it's a following indicator. In other words, the economy itself will lead to where the stock market will eventually go. And the inflation fears, I think, were overstated. Inflation is generally the basic amount of interest, the cost of interest, which right now, if you look around, it's probably 1 or 2%, and the price of inflation. So, or the amount of inflation. The inflation amount or rate right now is virtually zero, because you do have some increasing wages, but those have been offset by the tax cuts. You do have what possibly will be the Fed increasing rates, albeit by 0.25% at a time, and everybody's panicking at that. So I think it basically was a panic, and you have to look at the underpinnings of the economy. The effects of the tax cut have not even really been felt yet. They're just going to start being felt as corporations do their tax analysis for the year, and individuals start receiving tax benefits from their withholding. So that's going to be a stimulus to the economy. And what they're afraid of, would it be an over-stimulus to the economy? But I think the way that wages are set right now and the way competition is, and we're working in a worldwide market to where wages can't go out of control in one area without being offset by wages in another area. So I think the fact that the stock market is a following indicator, as the economy continues to go, if it can keep up at this 3% plus rate annualized, then it's going to be positive, and you're going to have stock market fluctuations. But the underpinnings of the economy are still very strong. So, you have a lot of trading that's triggered by computer trades, where if certain benchmarks get hit, they automatically trade an overwhelming amount of stock, which kind of precipitates downfall. So I think everything is fine. I mean, you might have down days, but as long as the economy keeps going the way it's going right now, I think the stock market will be as a following indicator following the economy.
All right, real quick, Ted Arnaud, we continue here at Casa de Emmanuel for a few more moments talking about the Dow Jones. And really the last couple of days, it has been an incredible ride. Economic growth has been accelerating and U.S. employment is at its lowest in 17 years. So borrowing money to stimulate the economy, I talked about this earlier today, Ted, with the morning headlines, wasn't required. Outgoing Federal Reserve Chairwoman Janet Yellen warned in December that it could leave Congress less ammo to help the economy when times get tough again. Do you make anything of that, Ted?
Well, that's like saying you don't store food in anticipation of a downturn. You just wait until the downturn comes and start doing it then. I think the fact that you're going to have repatriation of corporate cash, you're going to have the infrastructure expenditures, which may add to the deficit, but you can't just correlate the deficit with inflation. So I don't agree with her. I think that you're going to see a slow growth. You're going to see infrastructure dollars come in, and you're going to see growth in parts of the economy that we really haven't seen growth before. And automation is going to be the offset to wage increases. So I don't think wage increases by themselves, even though they're necessary for the workers, are going to add to inflationary problems with the country.
All right, ladies and gentlemen, Ted Arnaud joining us tonight at Casa de Emmanuel. That'll wrap things up for this evening. But tomorrow night we'll be back on the road and again talking football with Gino DeMarco, and why, if you're a student athlete, you definitely might want to consider Geneva as your next stop, and much more throughout the week. So please make sure that you stick with us right here. And until next time, on behalf of everyone here at Casa de Emmanuel and of course the Valino family, waiting for you for Valentine's Day. Remember, they've got a great menu in store, and a great evening will be yours if you make your reservation and come on down here with your significant other and celebrate Cupid's special day, which is just a week from Wednesday. Good night. Until next time.